When I first discovered the stock market, needless to say, it was love at first sight. And over the last 3 years, I spent studying everything I can get my hands on economics and trading and trade strategy. It's become my dream to become a professional day trader or professional trader in general. Uh, I put together a little bit of money in order to make this happen, and you can see that balance up over here. And unfortunately, though, in order for me to become a professional day trader, that balance is going to have to get much bigger. Question is, how much? Well, given the fact that minimum wage is $15 an hour, $15 an hour times 40 hours a week at 52 weeks a year gives you an annual salary of $31,200. As a trader, I don't have the same liberty of time as somebody working a regular job, though. So there are 252 trading days a year. If I'm going to reach my goal and at least break even on minimum wage, I have to do 200 or $31,200 divided by those 252 trading days a year. This would give me a total of I need to generate about $125 a day in trading profits in order to do this. Okay. I've been chronicling this journey and I write about it and I talk about it here in the Russel Journal. I am Russell and this is my journal entry for Thursday, October 3rd, 2022. You can see behind me is a list of the different sectors that make up the S&P 500. You can see that a number of them are green today and the bulk of them are red. Okay, this goes into what I want to talk about in today's show, where we're discussing the concept of what's happening in the market sector. Okay, you come in and you see a lot of traders that make a lot of plans. They'll say something like they'll file a trade plan that says if we get to this number here, if we fall to this number here, it opens the door for that number down there. Or if we go above this number here, it opens the door for the next number up. And you'll see a lot of support and resistance traders come in and talk about trading and trade setups and trade plans after this sort of fashion. The thing here is that what may cause these trade plans, especially when you trade specifically the indexes, is they're not like an individual stock. If you go in and trade, say, any tiny penny stock that's not really linked to any other sort of thing, then those trade plans, those trade theses that work off of support and resistance work really, really well. But if you trade something like the SPY or IWM or QQQ, they're all attached to other things, right? They're not all it's not one particular stock. So a lot of the stuff that happens inside of, say, a ticker like SPY is going to be relative to different things happening, such as XLT, XLI, XLU, right? The different spider sectors that make up the SPY or the different sectors that make up the S&P 500. Okay? So we have all sorts of different things that can happen within the chart that may prevent your trade thesis from playing out in a single day or playing out in a single hour or any such thing. Okay, so when you come in and you see sort of a little bit of a mixed bag here, you wind up where it makes sense that if you were trading something like SPY, that you would be mostly flat on the day. Now, where this really struggles with or makes you struggle with is like some of the different narratives that are around in the trading world. So you have a concept that's known as a liquidity trap. Okay, a lot of times the market maker on days or where you're having big expiration days happening, they will hold the price at a specific level. Maybe it'll bounce a dollar or two from that level above and below, but you really won't trend in one direction or the other. And this is a legitimate thing. There's times, though, when you need to recognize when you're in a liquidity trap and when the market is rebalancing itself based on different things, okay? You can tell today that XLI, XLU, XLE, right? and even some XLF, XLB, you can tell that some of those other sectors are up today, and they're up a pretty strong amount. And what they are is these are the sectors that tend to either do well in times of a recession, so they're a defensive position, or at least not do as bad as some of the other sectors, like the tech sector, which is XLK back behind me over here. Anyway, so you have some of these sectors that that can actually hold up the market. Now, tech selling off is a big deal. XLK makes up about 27% of the S&P 500, okay? So when it sells off, it puts a headwind against all of the other sectors that could be up, right? And traders should do well to look at this and look at these as on the market internals. Now, if you're interested in knowing what these sectors are, knowing what ticker symbols to put on your own chart, follow me on Instagram. I have a picture on there all ready for you guys with all of the market sectors and their weight, how much they affect the S&P 500 based on different things. Okay? So the question you're asking is what is really happening in the market then? Why are you have your defensive sectors up? Why do you have the other sectors down? And why is overall SPY flat? Well, there's two things that are really going on here. First of all, you have obviously these funds, you have 401ks coming in and purchasing stocks, and they're moving into defensive positions because we are getting ready to really see a recession. Okay? Now, you have your two negative GDP quarters, but the one thing that anybody who bangs their fist on the door of recession is that they're missing in their definition is that for a recession you need a 0.5% increase in unemployment. We have not gotten that. As a matter of fact, unemployment continues to stay low, if not go down. Okay, so the thing is like we haven't really stepped into the time of recession. We all know a recession is coming. We all pretty sure it's on the way, and that those layoffs are around the corner. Where and when they happen, can't say exactly. I personally am assuming everything doesn't happen until mid-December or January. I would say January is more than likely, as retail will begin to absolutely shed staff, getting through the seasonal hiring, and getting through the holidays. I think that's really what you're hoping for, or where you're going to finally see that. Now, so the whole thing is, and that makes this whole picture pretty grim, okay? The second thing that is happening here is ultimately you are looking for the Fed to pivot, okay? Now, rumor mill cracks, and I don't know a whole lot about the bond market. I know some things, but if you follow guys like Steve Van Meter, he is signaling, or he's announcing that the bond market is signaling for a Fed pivot. However, yesterday at FOMC, we got no indication from Powell that he's going to pivot. Okay, he didn't use as harsh of language as he did in Jackson Hole. He was not as aggressive, but he was very clear that there's another rate hike coming, and he was pretty clear that it's probably going to be another 75 basis points. You can try and front run the Fed. I find as of right now, as to my mentors and the people I follow, they would never do that. They would kind of move along with what the Fed is saying. And the Fed is signaling for another 75 basis point rate hike in December. And they may have to do it. They do need some part of this economy to break in order to bring inflation down. They don't want that to happen, but it's unfortunately got to happen. So if they're going to deal with inflation. So that all being said, really then tomorrow, the last ditch effort or hope that the bulls have for a Fed pivot comes tomorrow with the non-farm payroll numbers. Okay. Now non-farm payrolls, with them comes also unemployment. Okay. So we're gonna get an idea of like how much money people are making, whether salaries are going up or going down, how many jobs are gained, how many jobs are lost, things of that nature. And to be honest with you, it's going to be really positive numbers for the job world. The reason we know this is because there was no point where the jobs that the unemployment, like new unemployment claims, never got over 250,000 any single week last month. Okay, never got above there. The highest I think it got was like 218,000. And we also had the all-time low last month of like 198,000 new claims. That was like the lowest number of new claims that we've ever had in history ever. So the thing is like, if you're hoping that the non-farm payroll numbers are going to come in and signal the idea that a Fed pivot is coming, it's not. It absolutely can't. We already know it can't, because we already know what the unemployment numbers were for every single week last year. You could go back and look at them and do the math and already figure out what the unemployment rate is. And it's going to be below 3%. And even if it's not, it's barely going to be above 3%. So the idea that somehow that they're going to get some sort of weakness or signs that the economy is breaking and that the Fed is going to pivot is literally impossible. But there are hopefuls out there, and there are those who play games. Okay, there are those who play games in this market, and they will do things like try and drive the market up in order to sucker other people to coming in, hoping that there's plenty of people buying the rumor. Now, again, we really only had about 2/3% of like really variability in the actual trading range from open to the high to the close. It wasn't really a big range of trading, but it was grinding in the upward fashion. So it was giving some of the illusion that we could have a big rally coming tomorrow. Okay? So, but it's mostly an illusion. It's this concept in trading that says buy the rumor, sell the news. So those who came in today buying the rumor, and tomorrow when we get the non-farm payrolls, it'll probably be a situation where we sell the news. Okay, so we're going to go ahead. I'm going to also go to the chart. Okay, we're going to start out here on the VIX. Now, normally we've been kind of ignoring the VIX because it's been not really responsive. The market hasn't been really responsive entirely to it. But we are on the VIX. So what you can see here is our trend is obviously down, our momentum is embedded in the slow stochastic, and our bias is short, okay? Now, the VIX being down is typically bullish for the market, okay? What this is all about, most of us are really kind of scratching our head as to why the VIX isn't really doing anything. We're really getting nothing out, no signals out of the VIX. However, as you can see here, this was something I put together a couple of weeks ago, and you can go back and see the show where you have this run up, and then as you can see here, I drew this other line across all of these, and you can see how the candles are following it. This is a unique breakout setup. Okay, you go here. It's really a fake out to the downside. You go here, and then you pull back along this trend here, okay? You see how most of these candles fall. And then you'll break below it, and then what you'll get is a snap. And I'm not joking, it will be a rocket ride straight up through there. It will be one or two really big candles that will blow through the top of that. And that's a pretty typical breakout setup. This is something that I've been tracking. I've been kind of thinking this was what was setting up here. And part of the reason I've been thinking this is because of, and not really wanting to adorn a tinfoil hat, but the idea is that those who are looking to offload their positions are going to be very quiet about it. They're not really going to be talking about what they're doing or how they're doing it. And so, one, they either bought whatever put positions they were going to hedge with early in the beginning of the year. And we know that because we can actually look and see the contracts that are open into next year. And there is a lot. There's millions of put contracts from 45 to 185. And it's like tens of millions of those contracts that are open. And so they're just not buying them right now. The second thing that I was kind of figuring was going to happen was they were going to start doing their stuff off exchange. The real big guys were going to start moving off exchange because they don't want to spook the market. Okay? One of the things, if you ever read, there's a really great book called Reminiscence of a Stock Operator. I highly recommend. It's my favorite trading book. I highly recommend it to everybody. Should read this book. It is fantastic, and it will teach you more about trading than any other book out there. One of the things that's very important for trading is, especially if you're doing something like putting on a short position, right? If you see guys are, if you see, okay, see how this big move down, okay? That's a forceful move down, okay? In order to do that, you have to just straight plunge the market, okay? But what a lot of guys will do is they'll let the market come up and they'll build these enormous positions into the upside, right? And they just slowly build them. They accumulate these massive positions. And you're talking about billions upon billions of dollars that are going into these massive short positions. And then when it gets just high enough for where it's going to break, they slam it down, okay? So the thing is I really think that there is a breakout coming in the VIX. I think it's going to turn around and go back the other direction. This embedded reading, as soon as you lose it, you're going to have a lot of tension in the VIX, and you catch a rocket ride. Now, I could be wrong. As long as this embedded reading stays here, and if you lose it and reject the 18-day moving average, I will be wrong, which is more than fine. But now the other thing about it, and you'll notice when we go into SPY, is the VIX is red on the same day that SPY is red. And normally what this signals is that you will have a rally of some sort within the next 2 trading sessions. So tomorrow or Monday, we could be seeing a pretty nice bounce coming into the SPY. So we're kind of watching both sides of that to see what happens. Let's run over and check out the SPY. Okay, so here in SPY, we can see that we are now absolutely void of trend, okay? You have, this is your higher high. This down here is your lower low, okay? You do not have a pattern of higher highs and higher lows or lower highs and lower lows, okay? You currently have no trend here, okay? So the thing is that makes it really difficult for a trend trader. And if you were hoping to come in today and see this thing just tank straight down, that's going to be a little bit of a difficult position to be in because you don't have you don't have confirmation of a bear trend, okay? You've got bearish momentum, and that's about it, okay? So the two things you have, all right, so you've got no trend. Your bias is now short, though. You are underneath the 18-day moving average, okay? So that puts you on the short side bias, okay? Your momentum is down, okay? And so really, you can catch a bounce in this, but it's going to be hard pressed. More than likely, where you're targeting is this lower Bollinger Band down here into the 359 area. That will be the first target of the bears, okay? So you can see here now, and this is the thing I wanted to talk about over here. This is my new strangle that I have on this market. I'm short from 370, targeting 359, okay? And then we still are holding our call, okay? And our call is long at 402, but it expires. The put expires tomorrow, so I'll have to do something with it no matter what. The call expires next Friday. The good news is all of the trading I've done this week has paid for that call, okay? So the thing is if we go in the upward direction, and even if I sell this at a negative number to my account, because that call is paid for in the account, it's still profit. Anything I sell this for, I think it's worth $20 right now. If I sold that, even though I'm down on it, because the puts have paid for it, that $20 would be profit, okay? So really doesn't matter what happens with this call. Just so you know, my girlfriend has claimed the call. She says, oh, you don't want that anymore. It's all mine. So there it is. But anyway, so really where we're sitting with this is that this put position, if it doesn't pay, we can compensate with money we'll make back on the put or on the call, right? So no matter what, I can't actually lose a lot of money or really much money on this trade setup right now. And in the after hours, we are down, we are red. So far right now, it doesn't say it's green, it says we're red, but that's just because the options market is closed. If they adjusted that for that, we'd be green. So now, what I am expecting, I want to talk a little bit about my trade psychology going into tomorrow. Really, a lot of it is going to be about ignoring what happens in the after hours and ignoring what happens in the pre-market, okay? Especially the pre-market. Because what the pre-market will do, okay, what the futures traders will do is they will try and push this up all the way to 8:30 Eastern Standard Time when they get those non-farm payroll numbers, and then they'll pull the rug out from underneath it right when that report drops out. So the thing is I'm going to wake up, I expect to see SPY very green going into that report, and then I have about an hour between the report coming out and the opening of the market. So that is when I expect to see the massive price drop. So for me, it's about 5:30 in the morning when that report comes out. So I'm not too worried about that put position until about 5:31 tomorrow morning. And at that time, we should see the move down. Again, if that doesn't work, then we will be able to probably take some back of our money back with the call position. So this is where the infinite trade works. We're constantly hedging against this call once it's paid for, and we can continue to do that. So anyway, that should do it for me today. Again, watch the VIX, look out for that rally coming, watch for that non-farm payroll report. And the Russell Journal is written, edited, and hosted by me, Russell Liss. We are produced by Social Media Shows. Our executive producer is Maria Pereza. I'd like to thank you guys for joining me today. Try and hit that subscribe button, the like. See if you can find it. Go long on the like button, I'm supposed to say. And until tomorrow, pretend I said some sort of catchphrase.